everyone, my name is Rainer, and in this video I will be explaining to you the dollar yen trade I took sometime back in October. And it's actually a trade review, so I'll be covering on why I entered the trade, how I managed to scale in my trade, and finally how I eventually exited my trade. So as you can see here, these are my positions on the dollar yen trade I took. The first position occurred on October 28, 2014, and first price I had was the 107 trade. Then I scaled in at 108, 109, 114, and 115. So, looking at the charts, this is the chart of the dollar yen, the 4-hour chart, and the green arrow demarcate my entries. So, my thought process on how I got my first entry was this, alright? It was actually done on the 1-hour chart, and it looked something along the lines of this. Price was forming a uptrend like this, then it started to range. So the first entry I got was when price retested the support on the 1-hour chart. So that was my first entry, after which when price break out of this resistance over here, right, I placed a buy stop order of a few ticks, and that's how I got on my second position. So it's shown over here and here. So moving on, price then traded higher, and the third arrow came, and that was my third entry, right? So meaning that is my second scale in for the pair, and the reason I scaled in was because of this consolidation I had, alright? So I simply placed a buy stop order, few pips above the high, and went long the third time. So going forward, you can see the strong bullish momentum towards the upside. I think it was due to the BOJ news that triggered such a strong movement on the dollar yen. So moving on higher. Okay, so one thing interesting is this point A over here. So this point A actually means that I missed this trade. I think the reason was I was actually in Phuket, so I wasn't around to place an order. So if I had been around, what I've done is actually place a buy stop order above this high over here and have a stop loss of 2 ATR for this trade. But clearly I wasn't around and I missed this trade here, signal at point A. So moving on, you can see then price doing a slight retracement. And here is where I got my fourth trade on the dollar yen. Again, a very similar setup whereby I just simply traded the breakout towards the upside by placing a buy stop order few pips above the high over here. Okay, so that's how I got my fourth trade. And going forward, price then traded higher, retracing. Then here's the fifth trade of my dollar yen. Again, same setup I used as my previous entries. I simply queued a few pips above the high over here, and I got long. And also I used a stop of 2 ATR. So moving forward, you can see price is consolidating, then it traded higher before coming back lower. A little bit of whipsaw price action going on around here, but I still held on to all my positions. And then price trading higher right now. And one thing you've noticed that price has a tendency to respect the 20 EMA over here. Alright, it's tendency to respect the 20 EMA over here. So just something to take note of. And moving forward, so one thing I'd like to mention is at this juncture, I was actually in the money. So how I managed all these positions was that I had 2 ATR stops below the 50 period moving average. So my stop loss for all these positions was 2 ATR below the 50 period moving average. So to explain things a little bit, say for example right now the 50 period moving average is over here. So I had my stop loss 2 ATR below it. So 2 ATR below. So for example 2 ATR is say 100 pips, so I'll take the 50 period moving average, which is over here, minus off 100 pips, and that is my stop loss. So assuming the 50 period moving average right now, the value is say 117.400, the one shown over here. So say 2 ATR is about 100 pips, so I'll minus off 100 pips. So my stop loss technically at this point in time will be 116.400. So, and that's how I manage my trades for all these positions. And then going forward, over here, I would have scaled in my trade once more over here if I was around here. But the thing was, at point B was a signal whereby I show you that I missed my trades, because the reason was I was in camp having my annual in-camp training, so I wasn't around to place my orders. But had I been around in my computer, point B was a entry that I would have took and scaled in further onto the dollar yen trade. And moving on, you can see price now trading higher once more. We trace back towards the 20 period moving average, traded higher. And at this point of time, when as traders are actually calculating how much profits they are in, my main concern was, when would I get out should price goes against me adversely? Because you always want to protect your downside rather than calculating how much you're making, because the markets can do anything at any point in time. So it is actually prudent to actually have a stop to know when you get out should price have a sudden change against you. And moving forward, price then retraced towards the 20 period moving average, 50 period moving average, and down here was where I got long once more when price traded the 50 period moving average. And like I said, my stop was actually 2 ATR below the 50 period moving average, and if I'm not wrong, I had my stop loss placed around 118.5.50, so it was somewhere around here, I would say. Here was where my stop loss on all my positions. And going forward, I was eventually stopped out on this wick candle, this long wick candle down towards the downside. So that's where I exited for all my positions, and net I made about 50R on this trade. So to manage your expectations, not all trades are going to be home runs like this. Typically, out of every 30 trades I take, only one would actually come this far. The rest would simply incur me small losses and small wins along the way. So that is something that you have to take note of, and position sizing is something that you have to manage carefully, because before this home run occur, you would have faced a drawdown, and depending on how much you are risking on each trade, those drawdown could really hurt your account if you are trading too much of your initial capital. So that's something to actually take note of and to manage carefully, because I can't emphasize this again and again, because the moment you have a steep drawdown of say 80-90% of your account, even if you hit such home runs, right, you will not make back what you have lost while hitting the series of small losses. So this is something very important, and it's something that all trend followers would know. So that's all I have for the trade review. I hope you guys find it useful, and I'll talk to you soon.